Morning, everybody, and happy Tuesday. We'll get started in just a second. Alrighty, here we are. We'll give it another minute or two, and we'll get going. Good morning, good morning. Let's see here. All right. You guys hear me okay? Sounds good. All right, I think we are good to go. Okay, let's get started. Good morning, everybody. Serge Berger here from The Steady Trader. This is our Set the Market Morning Show. If you're here for the first time, welcome. Thanks for being here. We are focusing on looking at the top things for us here for today, or top of mind things, 10, 15 minutes, and then we move on. If you are new here, please make sure you subscribe to the channel. Please, as always, give us a thumbs up like that allows you to be able to be updated in real time when we go live, when we have new analysis, when we have new podcasts, and so on and so forth. So what are the things we're going to look at today? First of all, I do need to we're going to look at Tesla. We are going to look at the dispersion in sector performance and why we've had such significant dispersion over the past 2 weeks or so. And then we will also look at Nvidia. Before that, though, just as a quick reminder, we do, of course, tomorrow have the Fed meeting, the last one for 2024, and we are going to be talking about that a little bit more in our Inner Circle members live session that starts immediately following this session here in about 15 minutes or so. So let's start with the dispersion here that we've seen before we move on to Tesla, and this is really quite notable. So I've got here a 1 month chart of this is just the sectors of the S&P 500, and if you look all the way at the bottom right hand corner, you can see energy down almost 8%. And I want to quickly talk about why we think that's happening. And of course, in the upper right there, you see consumer discretionary stocks, and then tech, basically communications and tech. That's both tech, by the way. Riding high. Meta, by the way, which we talked about being a really good setup a few weeks ago, 2-3 weeks ago. We took profits on that trade last week. So for Inner Circle members, so hopefully for those of you guys that are Inner Circle members, you were able to take part of that. But let's talk about this dispersion. Now, as you guys probably know, energy remains one of our, if not the by far favorite sector going forward. Nevertheless, we've seen a really disgusting, performance here over the past month or so. Now, why is that taking place? We think the main reason that's taking place is year-end performance chasing. So ironically, what's happening is people are buying more of what they already own, but they want to own more of it to justify the index performance, and they're getting rid of stuff that hasn't done as well. So they're basically adjusting the portfolio so it looks like the way the market looks like in terms of performance this year. So to give you an idea of the 1 year look, you can see it's a very similar picture. Energy down 7%, up 7%, excuse me, for the year. But compared to tech and communications, it pales. Those things are up 27 and 44% respectively. So again, it's very clear. And by the way, healthcare and materials got pummeled too the past couple of weeks. So this is more of a function of flows, and that's why I talk so much about, there's a limit to what technical analysis can do, and I'm a big technical analysis fan, right? This comes from someone who supports that, a lot. But there is a limit there if one can't contextualize why something is happening, and the why doesn't always matter, but it really helps to know the why, or try to understand the why. It helps us risk manage a bit more. So I think we think we're going to see a reversal of this trend, certainly over sort of the course of a year or two, but possibly even really soon in the first quarter of this coming year. In fact, it's even conceivable that we start to see energy perform once again after the Fed. Although that's that's a very, very near term call, and I don't, that's too close a call here to really make. But I just wanted to give you that performance. Now, where are people piling money into more specifically? I mean, I think everyone probably knows this, but I'm going to show you this here in a way that's probably very clear. So again, this is just another way of looking at what I just showed you before. You can see the energy sector in blue over the past month or so, couple of weeks, getting completely torn apart. And then technology stocks obviously continue that bid higher. NASDAQ up again yesterday, the Dow down, equal weighted S&P down. So again, we're seeing that. To me, it's pure chart chasing or performance anxiety on the part of fund managers, and it is what it is, right? We have to respect that, but just know that can unwind like this, either literally any day or the beginning of the year. It can. So you have to keep that in mind. Now, let's talk. Before we go to Tesla, let's quickly talk about Nvidia. I think it's very notable that Nvidia certainly can get up again. I mean, it's entirely possible, and it probably will. The question is, what's the drawdown here? So just keep in mind that since its earnings report in November, the stock is now, it's not like down bad, right? It's only down 14%, but that's completely opposite of what many people said. Many people say, oh, stock's going to be down for 2 days and then it's going to go back up. And that's just been flat out wrong, right? So just keep that in mind. Don't listen to people who are only bullish all day, every day on everything, especially Nvidia. They're going to be wrong. They're going to be really wrong at some point, right? But then, of course, they look good again when the stock goes up, even though they told you it's going to go up every day, and it just hasn't. So the perspective here is really, really important. What's more notable about this even is that semiconductor stocks, which too, they haven't made new highs, but they actually give us a buy signal over on the Market Rover, which is our tool that we use in Inner Circle the other day, but Nvidia did not yet. So it's kind of a holding pattern. I wouldn't be shorted. I'm not sure it's worth being long it just yet from a trading perspective. That's that. So what's notable though is that Nvidia is not rallying along with everything else the past few weeks. That's what I'm trying to say. What is rallying though, and gets us to Tesla now, is this. And I'm very constructive of this stock. When it comes to next year, I really am. I think there's a lot of things going right here as far as the Elon stories go. But again, that's a multi-quarter at least, maybe more like a multi-year call. In fact, if we look at this and we kind of just look at the price chart here on Tesla, we can make a case the stock goes towards $1,000. Again, multi-quarter, multi-year time frame. And I have no problem with that. I just want to caution, again, the time frame here. Understanding different time frames is really important. So what I'm trying to get at is, I like the stock long term, but I'm also cognizant of the fact that it's starting to get stretched near term. So the way we can do that, and by the way, the way I just come up with the way I came up with $1,000 is there's some structural tailwinds there that we took into account, but also just the depth of that base of the price action since November 21 up until literally just a couple of weeks ago. That depth of that, for the most part, is about what the upside could be. It gets us to about $1,000. Now, in the near term, though, again, the stock is acting really, really well. There's no doubt about it. It was up another 6% yesterday alone. However, we are seeing levels, in many ways of reading momentum or reading overbought and oversold that is quite historic. So, like, for example, from a very simple moving average convergence divergence MACD indicator, you can see the last time we were anywhere near these levels was basically in October 21. And then, yes, the stock, of course, corrected big time. That's not our call here. But even just the course over a number of weeks, it corrected, 20, 25, 30%. So that's entirely possible and, quite frankly, would be very, very healthy here. For me, from a tactical perspective, would probably first need to see some sort of price action on the downside before I'd want to take advantage of something on the short side. But again, I don't think Tesla is a structural short. It's really more, if anything, very, very tactical, short term, and small size kind of thing. It's just because it is getting over its skis at least from that perspective. So anyway, just thought I would toss this out there, and again, when you get the MACDs in sort of these levels where we are right now, anything north of 1.1, we're now sorry. What were these levels here? Oh, I see. That's, never mind. That's a whole different level. Yeah. So, I mean, at this point, we're talking very, very different levels of overbought. It's just a new area. To give you an idea on this, what this looks like. Watch this. So this is a very simple way of looking at the moving averages. This is on a daily chart. Again, you can see we are trading, let me see, above the 200-day, just for reference points. Currently, the stock is trading about 50% above its 200-day. In 2021, it was trading about 40% above its 200-day. And in early 21, 50%, right? So these are very, very extreme levels in the near term. Again, that does not mean the stock has to crash. That's absolutely not our call. But it is getting stretched. We had a 60% above its 200-day in February 2020 before we had COVID. So it's not like this doesn't happen. It's just when it happens, the stock does tend to start to kind of lose its steam and start to consolidate. So hopefully this is helpful, folks. And we're now almost out of time here. Again, almost at the 15-minute mark. Please make sure you give us a thumbs up, like, and you subscribe. That really helps us to be able to continue this. But also, and more importantly, it allows you to be able to get alerted in real time when we do these live sessions. Again, in 2025, we're going to do a lot of live sessions right here on YouTube. So you want to make sure you're alerted to that. And also, of course, when we have new podcasts and other interviews, you'll be alerted to that as well. So hopefully you enjoyed this. Again, those are our top 3 or 4 things here for today. All of you guys are Inner Circle members. We will see you over there in about 7 minutes or so. Make sure you have the link for that. And we'll see you in a bit. All of you guys here on YouTube, we'll see you back here tomorrow morning at 9 o'clock Eastern. That's 6 a.m. Pacific on Wednesday. See you then.